Welcome to our comprehensive debate on two of the most discussed assets in the world, Bitcoin and gold. Today, we'll delve deep into their histories, examine their strengths and weaknesses, and explore which might be the better investment for the future. The debate over whether Bitcoin or gold is the superior store of value has persisted for years, with staunch advocates on both sides of the financial landscape.
Both assets are frequently viewed as means to diversify a portfolio or as a hedge against fiat currency inflation, which some critics argue is driven by unsustainable fiscal and monetary policies. Bitcoin, often dubbed digital gold, has traditionally been regarded as a speculative investment with high risk, appealing to those seeking short-term profits. Conversely, gold has long been viewed as a safe haven asset. Bitcoin's rapid rise to over $70,000 per coin, fueled by new investments from major institutions, has prompted investors to reassess traditional assumptions about the asset. Before we continue, it's important to emphasize that nothing in this video should be taken as financial advice. We are not advocating for the purchase or sale of cryptocurrencies. Your financial decisions should be based on comprehensive research and a clear understanding of the risks involved. Our goal is to offer insights, not recommendations. Let's continue our discussion on Bitcoin and gold, the dominant base layer money. Whether you're a seasoned investor or just curious about these assets, this video is for you. Let's dive in. History of gold and Bitcoin. Gold has been a symbol of wealth and a store of value for thousands of years. Its history dates back to ancient civilizations, where it was used for trade, jewelry, and as a status symbol. Gold has historically performed well during market corrections because it maintains its value. Its price remains relatively steady and often rises as investors shift from stocks to gold when a recession looms. Bitcoin, by contrast, is a relatively new phenomenon. Created in 2009 by the anonymous figure Satoshi Nakamoto, Bitcoin introduced the concept of decentralized digital currency to the world, ushering in a new era of finance and investing. Using the COVID-19 pandemic as a case study, when the pandemic began to shut down economies in 2020, many investors adhered to traditional strategies and moved to gold. Consequently, gold's price surged from just below $1,300 in early 2019 to nearly $2,100 by mid-2020. Throughout 2021, its price declined as economies gradually recovered, but it maintained an average higher than pre-pandemic recession levels. On the other hand, crypto enthusiasts who noticed that Bitcoin wasn't falling alongside stock values began funneling capital into it. The price, hovering around $7,000 in 2019, soared to over $29,000 at the end of 2020. By April 2021, Bitcoin's price had reached approximately $61,000 and peaked at over $69,000 in November 2021. It began a prolonged decline, entering a period of significantly lower prices known as a crypto winter. However, its price surged again to a new all-time high of over $74,000 in March 2024, following the approval of Bitcoin spot ETFs by the Securities and Exchange Commission of the US. Bitcoin has been more profitable than gold. While gold has a long history, Bitcoin is still in its infancy. This contrast sets the stage for a fascinating debate. Let's explore their unique characteristics. First, let's talk about the fundamental characteristics of both assets. Gold is a malleable, tangible asset used in various industries, including electronics and jewelry. It also serves as a reserve asset held by central banks. Bitcoin, on the other hand, is entirely digital. It operates on blockchain technology, which provides transparency and security through a decentralized network of computers. While gold is mined from the earth, Bitcoin is mined through a process known as proof of work. This involves solving complex mathematical problems, ensuring that new Bitcoins are produced at a consistent and predictable rate. Looking at the two assets as stores of value, due to its durability, divisibility, and scarcity, gold has long been regarded as a reliable store of value. These qualities have made it a favored asset during periods of economic uncertainty. Proponents of Bitcoin argue that it also functions as a store of value. Its limited supply of 21 million coins creates a sense of digital scarcity. Moreover, its decentralized nature means it is not subject to government control or inflation. However, Bitcoin's volatility has sparked debates about its effectiveness as a store of value compared to gold, which has a more stable price history. Now let's compare their investment performance. Historically, gold has provided a steady return, particularly during times of economic distress. Gold has generally appreciated over time as a hedge against inflation and currency devaluation, offering a sense of stability and reliability. While gold's price movements are more predictable, Bitcoin's potential for high returns, even with its significant volatility, makes it an attractive and potentially lucrative investment. Utility and usage. Gold's utility goes beyond being a store of value. It is also used in electronics, dentistry, and aerospace because of its excellent conductivity and resistance to corrosion. Bitcoin's primary utility is as a digital currency. Merchants worldwide are increasingly accepting it, offering a decentralized alternative to traditional payment systems. While gold's industrial applications undoubtedly enhance its intrinsic worth, Bitcoin possesses a distinctive utility. It has the potential to revolutionize financial transactions in the digital era, challenging traditional financial systems and offering secure, transparent, and efficient means of transferring value globally. Bitcoin's potential to reshape financial transactions and establish itself as a global digital currency represents a paradigm shift in the evolution of money and value transfer mechanisms, inspiring a hopeful outlook for the future of digital currency. Now, what are the security concerns? Both assets come with their own set of security concerns. Gold is susceptible to theft and requires physical storage solutions, which can be costly. Bitcoin, while secure due to its cryptographic nature, is vulnerable to cyber attacks. Additionally, the loss of private keys can render Bitcoin holdings irretrievable. Investors must weigh these security risks when choosing between gold and Bitcoin. Each asset requires different measures to ensure safety, market adoption, and regulation. Gold enjoys broad acceptance and is regulated by governments and financial institutions worldwide. Its well-established market infrastructure contributes to its reputation as a relatively stable investment option. This infrastructure includes established exchanges, vaults, and trading mechanisms, facilitating seamless transactions and price discovery. Central banks hold significant reserves of gold to preserve wealth and maintain financial stability. This widespread institutional backing adds to the robustness of the gold market, providing investors with confidence in its enduring value. Bitcoin's regulatory environment remains in a state of flux, reflecting varying approaches and attitudes across different countries. In some regions, governments and financial regulators have embraced Bitcoin, recognizing its potential to foster innovation in financial technology and drive economic growth. Conversely, other nations have imposed strict regulations or even outright bans on Bitcoin. Concerns over money laundering, fraud, and the potential for financial instability have led some governments to adopt a more cautious or adversarial stance. In these regions, stringent rules and restrictions can stifle Bitcoin's growth, limit its usability, and discourage individual and institutional participation. This regulatory uncertainty significantly impacts Bitcoin's adoption and price stability. Investors and businesses operating in jurisdictions with unclear or restrictive regulations may face higher risks, including legal challenges and potential losses from sudden regulatory changes. The lack of a consistent global regulatory framework contributes to Bitcoin's volatility, as news of regulatory developments in major markets can trigger sharp price movements. While gold enjoys broad acceptance, Bitcoin's future largely depends on how regulatory frameworks develop globally. Shifting to the environmental impact of these assets, gold mining has substantial environmental impacts, such as destroying natural habitats, contaminating water sources, and the release of carbon emissions. Bitcoin mining has also faced criticism for its environmental impact, mainly due to the high energy consumption required by proof-of-work algorithms. However, initiatives are underway to mitigate this impact by utilizing renewable energy sources for mining operations. Both gold and Bitcoin come with environmental considerations that investors should consider. Sustainable practices in both sectors are crucial for ensuring their long-term viability. Bitcoin versus gold, can they coexist, or is there a clear winner? The ongoing contest between Bitcoin, the digital innovator, and gold, the venerable stalwart, persists. Each has its ardent advocates, and forecasting a definitive victor in this epic showdown remains challenging. Nonetheless, let's explore some potential scenarios for how their dynamic could evolve. 1. Bitcoin could cement its status as a mainstream digital asset for investors looking to diversify beyond traditional assets. Its transparency and divisibility might drive its adoption, especially in areas with volatile currencies. Conversely, gold could retain its allure as the quintessential safe haven asset during economic uncertainty. We may witness a complementary relationship between the two assets in the future. Investors might allocate portions of their portfolios to both assets, with Bitcoin offering the potential for high growth and gold providing stability. 2. Bitcoin might witness widespread adoption and institutional embrace. Advancements in scalability and transaction speed could enhance its suitability as a practical option for everyday transactions. Furthermore, suppose economic factors such as sustained high inflation erode confidence in traditional fiat currencies. Investors may increasingly turn to Bitcoin as a superior store of value, potentially reducing gold's dominance. 3. Another interesting scenario is the rise of central bank digital currencies, CBDCs, which provide comparable advantages to Bitcoin but with less volatility. They could emerge as significant contenders against both Bitcoin and gold. The ever-evolving cryptocurrency landscape may witness the emergence of new contenders offering solutions to Bitcoin's limitations. These alternatives could divert investor attention away from both Bitcoin and gold. While it's impossible to predict with certainty, understanding the factors influencing gold and Bitcoin can help investors make informed decisions. So who will win the debate between Bitcoin and gold? The answer largely depends on your investment goals, risk tolerance, and belief in the future of digital versus traditional assets. Bitcoin faces a daunting path to dominance, beset by numerous challenges. Its well-known volatility poses a significant barrier, limiting its acceptance as a stable medium of exchange. Regulatory ambiguity casts a shadow, with potential government oversight posing risks to innovation and impeding Bitcoin's expansion. Moreover, environmental issues stemming from Bitcoin mining are a pressing concern, while security breaches on crypto exchanges undermine investor trust. However, gold also has its drawbacks. Its physical nature makes it challenging to store and transport, which is a considerable disadvantage in a world increasingly reliant on digital transactions. The susceptibility of the gold market to manipulation by large institutions raises concerns about its trustworthiness as an investment vehicle. Moreover, gold's utility is primarily confined to its role as a store of value, limiting its growth potential compared to assets with broader real-world applications. One thing remains clear: the ongoing debate between Bitcoin and gold still needs to be settled. As technology advances, regulations evolve, and the global economic landscape shifts, new challenges and opportunities will inevitably arise. The test for both assets will be their capacity to adapt, surmount limitations, and maintain relevance amidst perpetual change. Whether you prefer the ancient allure of gold or the cutting-edge innovation of Bitcoin, the choice is yours. Thank you for exploring these two fascinating assets with us. Stay informed, stay diversified, and happy investing.